Now, in the last bull market that we had, when Bitcoin was at the journey from Bitcoin at 6,000 USD to 65,000 USD over the course of about 12 months, Bitcoin corrected more than 10% 13 times. So meaning that we had 10% plus drawdowns. And sometimes they went down as low as 30, 35% corrections, right? Now that is an overall upwards movement of the market, but you have these huge corrections. And that's because how euphoric these markets get.
Hello everyone and welcome to today's webinar where we will be covering Bitcoin's recent rally and the upcoming Bitcoin halving. My name is Josh Gilbert, a market analyst at eToro, and it's great to have you with us today. I'm in great company today. I'm joined by Ben Simpson, the CEO of Collective Shift. Ben has been at the forefront of crypto for over 7 years now and has been on a mission in that time to democratize crypto education to people all around the world. Ben, first of all, great to have you with us. How are you doing today?
I'm good, man. Thanks for the intro. It's an exciting time, man. We're a week away from the halving. For us crypto junkies, it's just party time. Maybe not for the outside world, but yeah, it's a good time to be in crypto.
Yeah, crypto begins moving, don't you, when we see a lot more activity on Twitter. That's usually, or X we should call it now, that tends to be the sort of time. And also we're starting to see, obviously, a lot more education out there, or a lot more content, maybe I should say, around sort of the Bitcoin halving. And that's completely changed, I think, from what we've seen over years gone by. So let's strip it back. Let's go back right to what is the Bitcoin halving, because there might be a few people listening, joining this, that are thinking, what on earth is the Bitcoin halving? I've heard some crazy thoughts in the past. People think that Bitcoin is getting chopped in half and all these types of things. So Ben, let's just start very simply. What is it and why is it considered such a major event on the crypto calendar?
Yeah, good question. Yeah, I love the old, your Bitcoin's going to cut in half. That's not happening. So Bitcoin is a limited supply asset. So there will only be 21 million Bitcoin that will ever be created. Right now, there's about 19.5 million Bitcoin in circulation. So basically, Bitcoin is like a digital gold in a respect that there's a limited amount of them. Like physical gold, you have people go out and mine gold into the market. That's kind of similar with Bitcoin, but it's a digital a digital mathematical equation that miners solve. Miners in the Bitcoin world are basically just digital computers that are solving an algorithm, and they get rewarded with Bitcoin by solving those algorithms. And as they get those rewards, that is the new supply that comes into the market. So basically, it's mathematically coded into the blockchain that these miners will be earned this Bitcoin, and every 4 years that halves. So basically what it does is it halves the new incoming supply, meaning that there's about 1.5 million Bitcoin still to be created. I think there's about 16 at the moment that comes into circulation through miner rewards, and every 4 years that halves. So it's about to go to 8, and then in 4 years time it'll go to 4, etc., etc., etc. So basically what you get is you get this deflationary supply mechanism of Bitcoin, meaning there's less and less and less available Bitcoin to buy. And what we've seen recently is demand has been increased through the ETFs and other things that we'll most likely talk about. That is pushing the price of the Bitcoin up because of the supply demand economics.
Yeah, and I think there's always a lot of questions around sort of the Bitcoin halving in terms of why it happens. I was going out for some dinner with some friends on Sunday, and he said that he was out with a couple of other friends, and they were sort of talking about crypto, and he was trying to give some big alpha on crypto, but my friend said he didn't really know what he was talking about. So I asked him to say to him next time, ask him what the Bitcoin halving is to see how good his alpha really is. And then he started sort of quizzing me. And that's what I'm going to do to you now is sort of quiz you. And basically the question he asked was, why does Bitcoin have these halving events? Basically, what's the purpose of it? And why is it only every 4 years? There's a lot of why questions, I think, when it comes to Bitcoin. So yeah, why do we have them, and why are they only every 4 years?
Yeah, it's a great question. I mean, if we knew the founder or owner or creator, not owner, creator of Bitcoin, we could probably ask him. So one of the most, unique things about Bitcoin, for those that don't know, Bitcoin was created by a unanimous person or group called Satoshi Nakamoto, and he basically put out a white paper, like a business plan, when he launched Bitcoin 16 years ago. And a part of that white paper was this mathematical equation. Basically, it's got to do with, the economics and decreasing supply equation that gives Bitcoin one of its most valuable features, which is that limited supply feature, versus fiat currency or cash has the inverse properties, where you have governments printing money to boost the economy, which causes inflation, which causes all these sorts of purchasing power problems on cash. And the idea of Bitcoin as a whole was a way to diversify or hedge against that. And Bitcoin is now starting to be seen as that hedge against inflationary pressures of cash because of this deflationary, decreasing supply mechanism. So why is it 4 years? Ultimately, I don't think anyone really knows. Like, that was just what Satoshi came up with. And it's interesting, if you look at like the 4-year chart, historically, Bitcoin bull markets, like the most profitable time for Bitcoin is the 12 months after the Bitcoin halving event. But if you also lay it over the central bank balance sheet, which I know you talk about a lot, Josh, like as we increase, the money that the governments are printing on the balance sheet from the Fed, etc., it actually is very correlated with the last 3 halvings. So yes, the halving fundamentally gives a lot of upwards pressure on the price with the decreasing of supply, but it's also been correlated with a large number of cash being, I guess, added to the balance sheet, which also finds its way into risk-on assets like Bitcoin. So it's not just the Bitcoin halving which pushes the pressure of the price up. It's one feature. But as wise as it every 4 years, I don't think anyone really knows.
Yeah. And if, like you say, if we could get hold of Satoshi, then there'd be a lot of questions. Yeah. And I think you mentioned there, obviously speaking about sort of like the fiat currency as well. We've got a big reading in the US tonight on inflation as well. And again, one of the reasons that so many people obviously have turned to Bitcoin is for those reasons that you obviously mentioned there. And one of the reasons why fiat currency is maybe seen as, the less great these days. The US dollar was obviously, put as the king, and now Bitcoin is obviously coming for that crown because of, the reasons that you mentioned. The one side of Bitcoin, though, that I think is always worth talking about is its volatility. As we know, it is a highly volatile asset class, comes with plenty of risks. We've seen the price movements to the upside and the downside over the years are extremely large, even over the last sort of 18 months. And prior to that, obviously, some of the tougher years that we had back in 2022. What do you think, Ben, that investors should consider from a risk perspective, particularly when it comes to Bitcoin, and then especially when we're moving into such a big event as the halving that's gaining obviously a lot of media attention, but also a lot of investor attention as well?
Yeah, there's a lot of volatility in crypto, and for those that are new to it, can kind of be like a little bit, it can be very different, where it's not unheard of to see 10, 20% moves in a day, right? Like if you get 10 to 20% in a year in the stock market, that's like a good thing, right? Now, in the last bull market that we had, when Bitcoin was at the journey from Bitcoin at 6,000 USD to 65,000 USD over the course of about 12 months, Bitcoin corrected more than 10% 13 times. So meaning that we had 10% plus drawdowns. And sometimes they went down as low as 30, 35% corrections, right? Now that is an overall upwards movement of the market, but you have these huge corrections. And that's because how euphoric these markets get, how illiquid the markets are, and how the market caps are quite small. Markets in crypto trade 24/7. There's a lot of leverage trading. There's a lot of chaos that happens in crypto. Ultimately, what we teach at Collective Shift is just more of a long-only buy and hold strategy. You can get chopped out a lot if you try and chase markets and you try and chase coins and try and, pick tops and bottoms. The reality is this market is very volatile. So I would recommend just, buying and holding rather than trying to time the market.
Yeah.
And I fully expect more corrections to occur. And, with the Bitcoin halving next week, I would expect it probably going to be another sell-off around the Bitcoin halving event. But if we actually overlay a chart for this 2024 Bitcoin halving versus the 2020 Bitcoin halving, it's happening very, very similar. So what tends to happen in the weeks leading up to the Bitcoin halving is you have a decent correction, 25 to 30%, which we just had. Bitcoin went from 70,000 down to about 62,000. We slowly grind and up towards the Bitcoin halving event, and we sort of consolidate. And then in the weeks after the halving, that's when we get a big move to the upside in what we call sort of the bubble stage of a bull market. So, right now, Bitcoin is very attractive for me. I continue to buy every week. I think we're going somewhere around 150,000 US this cycle, currently at about 70,000. And once we get this sort of the halving away and behind us, and we're continuing to see the ETF inflows, you know, it's looking much more like a risk-off asset for a lot of international investors. One other thing I wanted to add: Fidelity in the US, one of the largest asset managers on the planet, now have Bitcoin in their conservative and balanced ETFs, which is interesting. So they're actually advising at least 1 to 3% Bitcoin allocation to conservative portfolios. So, you know, that's being added to retirement funds, and I fully expect that to head to Australia at some point when we actually get Bitcoin in our superannuation funds. And I don't think that's far away.
Yeah, that would be a significant, change to obviously the setup that we have here. Obviously, that's beginning to sort of happen in the US with those sort of ETFs, which, as we've seen already in 2024, has obviously had a huge impact already. Ben, you touched a little bit there on what happens maybe pre and sort of post halving, and we've sort of spoken a little bit about what happened over the last sort of couple of weeks in the lead up to this. Anything you can tell us about sort of history, about sort of what's happened post-halving for those that maybe aren't sure? We obviously do tend to see outsized gains. You mentioned that right at the start, but what can we expect this time round, and maybe what can we learn from history?
Yeah, so the last three halvings, Bitcoin in the year leading up to the Bitcoin halving, we went up 17%. In 2020, 142% in 2016, and 385%. So that's the year leading up to the halving. But really, where the outsized returns are in the year after the halving. So in 2012, Bitcoin went up 8,000% in the 12 months after the Bitcoin halving. It went up 284% in 2016, and most recently in 2020, it went up 560%. Right, so yes, the outsized returns of like 8,000% are probably behind us, but I expect we're probably going to get at least sort of 200 to 300% returns. We're expecting based off previous historic numbers and just the inflows that we're seeing from the ETF. For those that aren't aware, the US announced a new spot Bitcoin ETF back in January, which we've seen record number of institutional investors being able to access the asset now, and yeah, I expect that to continue moving into post-Bitcoin halving era. And again, back to that fundamental tokenomics of the asset, it is a limited supply asset. There's literally not enough Bitcoin to go around to every millionaire in the world. And when you're looking at where are you going to invest your capital at the moment, if you're wanting a hedge against the stock market, if you're wanting something a little bit more risk off and something that is going to continue to get attraction from investors and get that narrative, I think Bitcoin's just a good place to park, at least a small percentage of your capital in.
Yeah, absolutely. And it's a great time to ask the audience if you're buying Bitcoin at this particular time. Let us know why. Is it because of the halving that's coming up? Give us a comment down below if you have questions. Again, let us know. Is the halving one of the reasons that you're buying at the moment? What do you expect to happen following the halving? Do you see six figures for Bitcoin that we have so long for? Let us know in the comments what you're thinking. Ben, we also spoke there a little bit about the moves from Bitcoin, but it's not just Bitcoin that has the impact from the halving. We've also got hundreds and hundreds of crypto assets broadly. I wanted to know how you think that those other crypto assets respond to Bitcoin's price movements, because at Collective Shift, you don't just sort of cover crypto. There are a lot of other assets that you cover. We've seen it in previous cycles after the Bitcoin halving that altcoins do tend to have outsized gains as well. Anything that you think can happen this time around that? What are your thoughts? Any altcoins in particular that you guys are looking at?
Yeah, so altcoins are basically just leverage positions on Bitcoin or Ethereum. So we look at Bitcoin to really give us that indication of, where the market's going, and basically it's not unheard of to see, if Bitcoin does 100%, altcoins could do 400 or 500%. But also it's the same on the downside, right? So as Bitcoin declines in a bear market, let's say Bitcoin retraces 30%, 50%, it's not unheard of for altcoins to go down 70, 80, 90%, right? Like, it's pretty wild to hear this if you're not in crypto. But altcoins, you can get a sizable return if you're in the right sectors and you can ride the right, project. So basically, bull markets are split up into two phases. Phase one is where we're in right now, where Bitcoin tends to get a lot of the market share and a lot of the growth, and that's currently being led by the institutional investors. Phase 2, though, is when the altcoin market share starts to grow, and we're starting to get into that phase now. So basically what happens is that as money rotates from your larger caps of like Bitcoin and Ethereum, money starts to flow down into the lower caps. Now this is, as we head down, this is basically OGs, like bigger wallets, bigger whales starting to try and get a little bit extra return for their money. And as that money rotates down into the large cap coins and also altcoins, the last part of a bull market is usually what we call altcoin season or alt season. And this is where the altcoins are just making massive returns, 40, 50, 60% in a day. Everyone thinks they're going to be millionaires. Everyone thinks it's never going to go down. And as you and I both know, Josh, that is the absolute best time to sell and get the hell out, because that's when usually the bear market will kick in and you'll get this crash. So if you're looking at like a 4-year type, so crypto usually goes in 4-year cycles based on the Bitcoin halving event. You have the accumulation phase, you have the growth. So accumulation is basically bearish conditions, bear market, market chopping sideways. You have the growth stage, which we're in now. So the growth stage is starting to get more, sophisticated investors. We're seeing meme coins really get a lot of attention at the moment. But ultimately, it's not a lot of retail investors. That's still a fair chunk of bigger wallets that are moving the market. I'd say we're nearly at the end of this growth phase, and we're starting to get into the bubble phase. So the bubble phase is when you really get outsized returns. That's when everyone's getting into crypto. Your mum's quitting a job. Your plumber's talking about it. Your next door neighbor's knocking on the door asking about Dogecoin. That is the bubble stage, and that is when it's peak euphoria, and that's when you start to see the bigger investors start to rotate out, right? We've got to remember that markets are two-sided equations. There can't be all winners. There's always winners and losers, and unfortunately, retail investors are usually the ones that lose because they buy in at the bubble and they sell in the crash, right? That's obviously the worst thing you can do. You need to be getting in the accumulation and growth phases and selling out in the bubble. So the sectors that we're looking at, we can get into, but yeah, ultimately, Josh, I think we're starting to, post Bitcoin halving, as I said, the 12 months after the Bitcoin halving is the most profitable. So I expect us to start to see good returns in the altcoin market, heading into later 2024.
Yeah. And I think one of the big questions about the Bitcoin halving that a lot of people tend to have is that we often see it sometimes in stock markets as well, where we have a very big event that a lot of investors know are coming, and it tends to be one of those where you buy the rumor and then you sell the news. We see a big move before it happens, and then we have a bit of a sell-off. We have very similar with the ETFs. We've had other events, the Lightning upgrades. We've had it with Ethereum in previous sort of upgrades as well. I think I might already know the answer to this question that you're going to give me, but I'm going to ask it anyway, and that is, do you think that the concept of the halving is sort of priced in? Because we saw big moves in 2023. We had more than 150% gains. And in 2024, we've already hit a new record high, and we're up over sort of 50% in that time. So, do you think that we've already seen the biggest move from investors? Or do you think that, the halving itself is a big enough catalyst to keep us moving higher?
Yeah, I definitely think, it's starting to be, if not already priced in. I think it's very well known by investors now. Crypto is historically always plays out by the rumor, sell the news. I think like the biggest event that I remember was Dogecoin. Elon is a big, promoter of Dogecoin, and a few years back he was going on Saturday Night Live, one of the biggest, TV shows in the US, and everyone was pumped out. Oh my God, Dogecoin's going to go to the moon. We're all going to be millionaires. And literally at the time he walked up and spoke about Dogecoin, it absolutely plummeted in price. And that happens so often, right? We had that with the ETF announcement. Bitcoin retraced 20 or 30%. I would expect something similar to happen at the Bitcoin halving, next week. And it was the same thing that happened in 2020, right? The Bitcoin halving event happened. It's not like the fireworks go off and she's party time. It's like, okay, cool. Miners get less rewards and let's just play on. You know what I mean? So what happened in 2020 was we actually went through a multi-week consolidation period where Bitcoin was sort of chopping around, and then it wasn't for another month or so or two and until we started to get to sort of that market growth. And I'd say that Bitcoin is one of those assets that is big enough now that it isn't necessarily led by speculation. Like, it's starting to be more seen as that risk-off asset. People are holding in their portfolio, and it's not really until we're gonna get through probably 100,000 USD that we really get complete price speculation. Because once you're at an all-time high price, probably similar to the stock market, Josh, it's like you don't really know where it could go. You know, like with the stock market, at least you're looking at revenue multiples, EBITDA. There's some sort of evaluation process. The reality is in crypto, there isn't a blueprint way to evaluate these tokens. You know, you're looking at on-chain data, you're looking at sentiment, you're looking at competition, future growth, speculation, narratives, social media. There's not a real it's not like you're looking at the Bitcoin EBITDA to figure out what price we should be buying this at. So yeah, that's where the price appreciation can come in when it's in pure price speculation. But I don't think we're going to get there until probably 100,000 US, and that's when it's going to hit the mainstream media again, and then who knows from there.
Yeah, absolutely. And I guess, I think that's a really important, message to sort of note is that, yes, once we obviously have the halving next week, it doesn't mean that impact is going to sort of come through straight away. We've seen that in previous cycles, that it does tend to take a bit of time for it really to sort of come to fruition. So if Bitcoin drops by 10, 15%, next week, don't be surprised by that. But also if we get a move to the upside, don't be surprised by that. That is sort of what we get, with Bitcoin. Ben, we spoke a little bit earlier about sort of fiat currency, US inflation. A big driver from our perspective at eToro for crypto this year is also rate cuts coming. The idea of rate cuts is that ultimately we're going to have more capital being able to flow back into assets such as crypto. It's good news. Unfortunately, those rate cut expectations have been pushed back significantly over the last sort of 4 months or so since we started the year. The market's expected 5 rate cuts in January, which is when we sort of started to see that move again from Bitcoin. Now sitting today, market's expecting under 3 rate cuts from the US Fed this year. I just want to sort of get a view from your point and how much do you think the macro sort of environment affects Bitcoin at the moment, compared to something like the halving, because it is still a driver, but do you think it has as much impact as it has in the past?
Yeah, it's a good question. Like, it definitely does have an impact. I mean, when we started to see, post-COVID, when they were raising rates and starting quantitative tightening, like Bitcoin plummeted, basically, just like tech stocks. Is very correlated. I think what's going to be interesting to see is if Bitcoin can actually break away from this risk-on tech stock style asset class, which I have always believed Bitcoin is a risk-off asset, right? Like it's not a tech stock in a sense that it's actually a deflationary asset. It's more of a digital gold. More people buy and hold Bitcoin than anything else. They're not really using it as a currency. Like, yes, you can use it, but it's more or less being seen as this sort of digital gold. So yeah, if rate cuts were to come later in, like at any point, like I think that's always bullish. But we're sort of in this interesting time to see if like Bitcoin can actually pull away from that like risk on asset style. In saying that, as I mentioned before, like in a environment or economy when money is cheap, rates are low, and even there's quantitative easing, like Bitcoin has skyrocketed. Like off the central bank balance sheet, like versus Bitcoin chart, like every time we've had quantitative easing, like Bitcoin has really appreciated in price. So yeah, I still think even with crypto itself, like if we think about it as an asset class, even investing in general for everyday people, discretionary spending's down, cost of living is going up, wages are not really doing anything. Like the available capital to invest is actually quite low, I think, for a lot of family homes. And that's why I think right now a lot of this money coming into the market is more institutional-led, higher portfolio value sizes, and it won't be until we really break through, all-time highs, these higher levels, when like I think the retail will go, oh shit, maybe we do need to get in here, and it's sort of they throw at the stumps to try and get ahead in life, perhaps, but it's still to be seen. I think the biggest move was the Fidelity adding Bitcoin in their conservative and balanced portfolios. That's the biggest recognition for me, and the BlackRock ETF push that Bitcoin is starting to be seen as a risk-off asset. So I think it'll become less correlated with rates.
Yeah, and I also think as well, these big names and these big institutions that have driven really probably the price this year, we know that retail investors own this asset very well, and I think the institutional money is what Bitcoin and crypto has sort of longed for. I think that what that also does brings a maturity to the asset as we move along as well, and we may see less volatility as time goes on. We're probably still going to get it from those smaller altcoins that you were sort of talking about earlier, but that maturity will sort of allow it to be, welcomed maybe a bit more in portfolios. It's maybe been shunned by institutions before because of that volatility. And I guess that's, a good point to sort of talk about is that institutional involvement within the crypto space. It has sort of continued to grow over the years, and obviously these ETFs have been a huge step, in the right direction. They were 10 years in the making. They've already had a huge impact this year. We've seen billions and billions of dollars flow into these ETFs, and we've seen those huge names that you mentioned there, Fidelity, BlackRock, buying up Bitcoin by the bucket load. What are you looking at there in terms of how you think that will impact, Bitcoin, particularly over the long term? And do you think we'll see more coming from the SEC? I know we have the Ethereum ETF spot acceptance coming up in May. So what do you see institutional involvement having on the crypto space?
I think it's just legitimacy, if anything. Like, for so long, crypto has just been seen as this sort of like, I don't know, random thing that dudes in their bedroom talk about that's used on, the black market. Like, now it's really being seen as a legitimate asset class. And I think the next thing that's going to come to crypto is Ethereum. And we're seeing the Ethereum ETF being pushed right now. BlackRock have launched their $100 million tokenized fund. I'm a big believer that the world will continue to become more tokenized in the future, where you can basically buy fractional pieces of real world assets that's being built on Ethereum, and that's where you can start to get more exposure to these other altcoins that are building in that sector. So, the fact that BlackRock are now pushing an Ethereum ETF as well, if that gets approved at some point in time, I would expect something similar to happen with Ethereum that has with Bitcoin, with sort of that massive growth. Bitcoin was only at 40,000 US in the start of February, and we're now at 70,000. Like, I think people forget how quickly this asset class can go. It was only end of December 2022, where Bitcoin was at 16,000, where we started buying, a lot of Bitcoin at that price. Sentiment was at all-time lows. There was no ETF decisions. The SEC was cracking down. Like, there was a lot of bearish conditions. And for us, looking at some of the on-chain metrics, we were seeing a lot of people continue to accumulate. We felt the Bitcoin halving event was coming up. The narrative will start to come back in. And that's where you can really take advantage of that. I mean, the $16,000 level we bought and where we're 70,000, like, I mean, that's a 400% increase roughly in like a bit over a year, 300%. Like, these sort of returns don't come in well, they do come in other asset classes, but I mean, something, so quick in that time span, unless you're investing in early stage startups, is kind of hard to come around, right? Or Nvidia. So, for us, it's about legitimacy. And we will see another bear market as well. Like, institutions also get scared, right? And I would fully expect when Bitcoin hits 150,000 US that we'll pull back to 50,000 again, right? Just like, we saw 68 to 16 or 5 or whatever we got to, you know what I mean? So, it gives legitimacy, but also it's a completely new market that not a lot of people understand. I mean, like you said, Josh, people think their Bitcoin's going to halve next week.
Oh, that's it. And I think also, talking about that maturity, it comes with time as well. But we've also got to remember when we do see these big run-ups in the price, especially from institutions, there is going to be profit taking along the lines. These institutions are going to be wanting to take profits for their clients, especially if we see it outsized. If we're at $70,000 right now and we move to $150,000, you better bet that these big names such as BlackRock are going to be taking those profits for their clients, because if they don't, then they won't be very happy. And I think that's something really important to remember, even around these sort of current levels. Pretty much anyone that's ever bought Bitcoin is sort of near profitability. So profit taking is a huge thing to sort of think about when it comes to sort of crypto, and can often sometimes mark those sort of peaks in markets as well.
Yeah, I mean, the sell strategy is nearly more important. I mean, anyone can buy crypto. That's easy. Any Tom, Dick, and Harry online with a YouTube channel will tell you to buy their crappy coin. But like, it's the ability to get out at the right time, which has driven the results that I have. Like, I've made life-changing amounts of money back in 2018, 2019. We invested really heavily in the metaverse before, the metaverse was really a thing. This was before Facebook had renamed to Meta, and overnight, Facebook renamed to Meta, and these metaverse projects were doing 10, 20, 30x returns in days, right? It was bananas. But for a lot of people, that are making that amount of money on paper so quickly, your brain can just start to play tricks on you, and you think it's never going to go down, right? And a lot of people don't sell. And that's ultimately what happens, is that only 10% of people usually make outsized returns, based on the 90% of people who don't know what they're doing and they lose, right? So, having a strategy and having a plan, that's I think one of the biggest reasons that I was able to make so much money, that we now teach a lot of people that we work with about having a plan, having targets set. How are you going to sell? Are you selling on a percentage-based time horizon? Are you looking at lump sum, dollar cost averaging out, trailing stop loss, at what price? Even having things like goals, like what's your investing game plan? Like, where are you trying to get to with your crypto? Are you diversified enough? Like, what sectors are running before others? What's your short-term strategy? What's your long-term strategy? Like, thinking about a lot of these things that a lot of people don't think about is the edge, in my opinion, to beat the other side of the market, who are ultimately trying to win too.
Yeah. And Ben, on that, is that the piece of advice that you would give to investors?
Oh, 100%. I think just sitting down, and we've got a free template to help if you need, just on creating your own crypto strategy. And the things I'd be thinking about regardless is goals. What's your risk appetite? What's your portfolio allocation? What is your sell strategy? Like, how are you going to take profits? How are you getting your Bitcoin into USDT? Are you going to stable coins? Are you going to fiat? How much are you going to sell? What about your altcoins? When are you going to sell those? Are you selling those into Ethereum? Are you going to sell them into stable coins? Then what are you going to do with the money? All of these things you do not want to be thinking about at the peak of a bull market, right? When you've got a decent chunk of crypto in your portfolio, the last thing you want to be thinking about is what should I do now? It's because that is going to be too much for you to figure out what to do, which will mean you'll get analysis paralysis. Everyone will be telling you different things on YouTube and Twitter and TikTok and LinkedIn, and your mum and dad, and everyone's going, oh my God, we're all rich. And then 6 months later, crypto will be down 60%, we'll be in a bear market, and you'll be no richer because you didn't take any profits. So the plan and strategy for me is the number one piece.
Absolutely. And like you say, you want to have that sort of going into it so you don't have that sort of euphoria take over. Well, either way, Ben, it's certainly going to be an exciting 2024. Obviously, that Bitcoin halving coming up, incoming rate cuts, the potential to maybe see a central bank owning Bitcoin on its balance sheet in the later half of the year. We've got plenty to look forward to. And if you do need more help, if you have more questions, head over to the eToro Academy, plenty on the Bitcoin halving, and follow Ben on Twitter as well. And if you have questions, give him a message. The guys at Collective Shift can certainly help you out. Ben, thank you very much for joining us today. And here's to an exciting 2024 for Bitcoin and crypto.
Thanks for having me, Josh. Yeah, go crypto.
Thanks, guys. See you next time.